Hey, it's Andreas, and welcome back to the channel that teaches you to be a little bit better with money. The topic today would be Pfizer, and why did I choose to talk about this company? Don't I usually talk about growth stocks or some value companies with great valuations? Well, in fact, when I was looking at the stock screener today for companies with a low PE, then Pfizer popped up, showing a price to earnings ratio of 13. This is a very low valuation, and it got me curious. How come Pfizer has this great valuation today? So I had to take a look at operating statement, to take a look at what's going on with this company, basically. And to understand price, the stock price, the one side of the multiple, has not been sliding. There's no great dip in this company. In fact, share price is almost at an all-time high. Well, how come it's got such a low valuation then? Well, it's the other side of the equation. It's the earnings. Earnings for this company has basically exploded, and this has been great for shareholders. I can imagine that Pfizer shareholders are very, very happy about this. And if we take a look at percentage change, we can see that from 2020 to last year, the increased total earnings from all groups by 95%. And my criteria for a growth stock is basically a 30% year-over-year increase in revenues. So, a revenue increase here of 95%. That's, if they can keep that up, then I'm sure a lot of shareholders will be very, very happy. And, what's the source of this revenue? And maybe the title of the video gave this away. It's a little post here called vaccines. And, if we take a look at for the full year 2021, they made 42 billion US dollars from vaccines alone. And if we take a look at the full year of 2020, from all areas of operation from Pfizer, everything that they sell, then we can see that they made 41 billion here. So in 2021, they actually made more from vaccines than from their entire area of business of the previous years. And this explains this monumental increase in revenue. And then we get to the question, how come the market is putting such a low PE ratio on this company? Because the PE ratio tends to be very tied to growth. And if a company delivers great growth, then we tend to give them a higher price to earnings ratio because we expect revenue in the future to be good, great. And then we can pay a lot more today, if that makes sense. And we can see that Pfizer is very aware of this low valuation. We can see that they try to label themselves as a growth company, and then that they try to communicate that future cash flows are certain. They try to talk about some sort of guidance here for 2025 to 2030, that they will have durable COVID-19 revenues. And this is where I believe that the market disagrees with management in this case. Because if revenues was so durable and so certain as the management tries to give a look of, then future cash flows wouldn't be discounted so heavily that Pfizer has a PE ratio of 13. Then they would have a much higher valuation multiple. And this is what this communication is designed to do. communication regarding future strategy and capital allocation. They had a lot of slides on this, is to make the market more comfortable with the certainty of their future cash flows, and then they can start to get the higher, valuation multiple, and then stock price basically goes through the roof, and that's usually great for so certain compensation packages. That's for management. They tend to be compensated based on stock performance with certain options packages and grants. So this only makes sense. And remember, I'm not a doctor, all right? I don't understand pharmaceuticals. There's a lot of complex parts in this business, all right? And I'm talking about things like the negotiation process between pharmaceutical companies and governments for distribution of drugs, and all kinds of getting things through the Food and Drug Administration over in the US and the European equivalent here where I'm from. And there's a lot of different aspects to this business that I'm not very familiar with. But I think logically about this, and I use my limited understanding of what happened in previous pandemics to try to make a case for why the market is discounting future cash flows so heavily. And what I remember from being younger is that we had this thing called the swine flu. And this was something coming from Mexico, and it was something that we all got vaccinated from. It was, classified as a global pandemic. I was in middle school back then, but I remember, we all got shots, and this created a great boost to revenue for the pharmaceutical company producing these vaccines, because we as a society, we valued it a lot, just like we valued it a lot in this pandemic. Don't look at the money, look at the value it provides to society, and that's what they're going to be compensated for. But where is the swine flu today? We're not getting vaccines for that anymore. That's not a durable source of revenue for the company that produced this vaccine. And if we look even further back, I found out about this thing called the bird flu that my parents would have gotten vaccinated from, and the boomer generation. So we had a pandemic back then as well, but again, where's the vaccination from that? I didn't get a bird flu vaccine along with the combos of I think it's like polio or smallpox or whatever. You get a lot of shots when you're younger, but bird flu was not one of them. So that source of revenue is also gone. So looking at history, two pandemics, great revenue, great value to society with the vaccines back then, but then today, 2022, we are not getting shots, vaccines for bird flu or swine flu. And if we look at this as a reference, then maybe we're not going to continue to take, COVID-19 vaccines in 2025 to 2030. And I think that this creates a logical case for why the market is discounting future revenue so heavily for Pfizer, only giving them a PE of 13. But again, I'm not very familiar with the pharmaceutical industry. I work in tech. That's my area of expertise. And I was just so curious, when I saw Pfizer pop up in the stock screener, that I had to make a video about it. I had to, spend some time thinking about this and trying to make up a business case for why the valuation was so low, and this was the best I could come up with. And if you work in the pharmaceutical industry, please share in the comments below. Do you think that COVID-19 revenues will be durable for Pfizer? Do you think they can continue to be a growth company growing at over 30% on a year-on-year basis in terms of revenue? Because if that's the case, then there's a great opportunity to make a lot of money by investing in this company. But in my case, I have too little knowledge about this, and I think the risk is too great for me to put my own money into this company. But yeah, it was a little curiosity that I found in the stock screener, basically. That's been it for this video. I hope you make a ton of money, whatever trades you decide to do. Take care now. Bye bye.